Hey everyone, Joe Nelson, the Nelson Insurance Agency. So let's take a second. We're going to talk about inflation and insurance. So this is going to be kind of a broad topic, but we're going to hit on why most of our property and casualty coverage is going up kind of year after year, and especially within the past couple of years. So I'm going to start first with auto insurance. Okay. Now, these statements are going to largely focus on my market in Florida. However, they are also going to be focused a little bit on my carriers. Not every situation is the same. Much of the information I've gathered, and it is also, a little bit of conjecture on my part. There are some guesses. I don't have all the correct information at the same time. So let's talk. All right. First off, so let's kind of say this. When it comes down to it, insurance prices have gone up. Mostly across the board, we've seen a lot of property and casualty companies that are raising rates. When it comes to auto insurance coverage, right, this is a result for a lot of different things. Much of it is because of the pandemic. And, there are a few different parts. First, used car values are up 67%. Okay. So when it comes down to it, car prices are 67% higher. Now that they are 67% higher, when we total a vehicle out, it's much more expensive than it was in the past. So many companies, when we total a vehicle, they're going to do the actual cash value, and they're going to do basically kind of what is a fair market value for your area. So for instance, they're going to find the year, the make, the model, for sale, 3 lowest prices that they can find with similar mileage within about 250 miles. Okay. So, they might find one vehicle in Wisconsin that's way cheaper, but most of the time, that's not going to be the one they use. So that's the first part. Second part is that part delay. Okay. Parts now, and I mean, like, this is big. Ford or Chevy, I forget one of the two, like when you buy a new truck, they don't have the heated seats component. So it was delaying in the past. Now they're just selling it. You got the button for heated seats, it doesn't work. When it comes in, maybe 6 months or a year from now, we'll kind of do almost like an issued recall, bring it back in, they'll install the part at that time. So they have long time wait on those parts, okay? So what happens with that? So if we can't get a part in your vehicles in the shop, we have to cover the rental car, okay? If you're the at-fault party, you pay for the rental car out of your property damage. If it's a single or multi-car accident, and we have no car reimbursement, maybe it would take 7 days to repair before, maybe it takes 27 now. So, yeah, longer, more costly repairs than that. The third part is it comes down to COVID. A lot of insurance companies gave a rebate to their customers at the beginning of COVID. One, was a nice thing to do to be able to help out. Two, again, at the time, we assumed people would not drive as much and the accident frequency would drop. Little did they know at that time, the accident frequency did not drop. So, the claims, had the policy give back. Guess what? Now they're bringing it back in. Okay. It's fairly simple. They sold something for not enough money. They did. Okay. So they get for losses, they charge more. Simple as that. All right. What can you do about it? Well, mostly nothing. Okay. Nothing. There's some companies that filed for 16% rate increases, and there's some companies that filed for 3%. There's some companies that take a little part down, and there's some companies that take it, just a minor rate change kind of up or down over time. Okay. But mostly there's nothing that you can do. You can shop your insurance and maybe move to a different company, but again, that's going to review all the different underwriting factors at once. Okay. Another thing is that if your job is still remote, right, you can do like a telematics program. Now this is done with like a progressive snapshot, whether it's the locks you plug into your car, or the telephone app, or AAA Drive, or Farm has a program. Lots of them have programs. Essentially, what happens is that you have a device in your car that monitors your driving habits. Okay. Now, some companies, they look at different things, and some companies, they don't. Okay. A lot of times what they monitor is braking and acceleration. All right. So if you have a lead foot on either one of those, it's not going to be as good of a weight. They're going to look at mileage per year. Maybe you've been telling your insurance company, oh yeah, I drive 2 miles a day to work, 5 days a week, barely put 6,000 miles a year on the car, and then they find out your work's 20 miles each way. It could be it too. So that's the downside. Lead foot, bad driving. A lot of times driving between midnight and 4 a.m., risky behavior stuff. Maybe they find out you're Ubering and you haven't been telling them. Okay, different things. But let's just say you're a good driver, you don't drive much, or you work remotely, so your vehicle's parked. Now's a good time to be able to jump on one of those programs and save maybe 10%, 20%, 30%, or something else. Okay. And again, if it tells you, if it reviews your driving habits as you kind of go along, and you can see the trips and how they scored, maybe you can kind of learn from something. Back when I did one of the programs, it would beep if you ever braked hard. Where I'm from, driving is much more aggressive down here. So typically you try to gut a light, so kind of push the brake a little bit, see maybe if the light is going to turn to green, and then once you hit like kind of a white line, then you step on the brake pretty hard. So you don't really have that down this way. It's not a good way to do it because when pressure on the brakes, you're kind of feathering the brakes in, causes them to wear out faster, and it's just causing more accidents. Okay, so that's a habit I learned that I had, and I worked hard at fixing, and now I'm a much safer driver. But let's dive over to property coverage, and this is where we're seeing a lot. Okay, what does inflation have to do with property coverage? Well, in Florida, most of the property coverage increases are because of litigation costs. Okay, because of tort reform rules that have not been enacted by our legislature, that have been held up by the Speaker of the Florida House, and they are mostly that's mostly it. Where litigation costs are bleeding insurance companies dry, so they have to be able to largely drastically increase the policy premiums to make up for it. One of the largest property insurance companies in the state of Florida has lost over $100 million 3 years in a row. I mean, if you're selling hot dogs and it cost you $1.70 to make a hot dog, and you were selling hot dogs for $1, even if you have a ton of money in the bank, you're gonna run out of it. It's kind of what's happening. We're paying for our neighbor's food booth, for our food booth. There's different people that come knock on your door telling you they can find the damage and file a claim for it. Now you're paying for it. They told you it was going to get you a discount, but not when they did it so much, and they repaired damage that didn't necessarily fall under sudden or accidental. And they sued the insurance company to force the just excessive amount of fees and multipliers of legal costs to get them to pay for something that they shouldn't. That's first part. Okay. Well, let's just say other side. All right. What's the housing market going for now? What are things going up to? I know many of us have maybe tried to look at the value of our house to be able to see what's increased. Whether you're looking at getting a home equity line of credit to be able to build that master suite that you always wanted, or you're looking to jump out at the top of the market because you bought super cheap, going out high, getting something nicer with your equity. Good for you. Okay. But let's pivot back for a second and talk about, why those costs are up. Firstly, obviously it's a heavy seller's market because interest rates are low, right? Which forces our prices up because you can pay $30,000 more for a house with a lower interest rate. You're gonna pay less in the long run than $30,000 less for the higher interest rate. So things go up. That's the first part. All right, the second part is cost of materials. All right, so we have the increased cost of materials and supplies. And this, you've probably seen things like in the year past or so, but I'm going to Home Depot and Lowe's and doing some things. The most common piece of wood that's used in both roofing and home construction is what they call the OSB board. Okay, 7/16 of an inch. It's a sheet board. Okay, it's really big. They use it to be able to put it on top of your roof. They use it to protect the sides of houses. Used for a lot of different reasons. Okay, those boards before the pandemic, they were about $6 to $8 a piece. At the moment, they're running about 40. Okay. So again, the most common piece of wood that they have to use to be able to build a house is now 5 times as expensive. So when there's a claim, it costs a lot more money. That's the first part. Second part is yes, there are increased code things that we have to fix. Okay, whether it's like the additional nails or secondary water or something like a roof replacement or just even GFCI outlets or something else. And there are additional code changes. Okay? Not a huge driver. Obviously, with increased labor costs, that's a big one. So we have increased material, increased labor costs is pushing the values up. And that's the next part, values. And I can say this pretty certainly, okay? I started writing insurance back in 2006. And I started writing home insurance, primarily in Florida, Scandia through in Bay County in 2013. Okay? So when I started writing for a couple of years after, so 2013, 14, 15, at a minimum, right? $110 a square foot was average construction in Escambia County. $80 a square foot was average construction in Santa Rosa County. And $90 was average construction in Okaloosa County, especially in the Northland and Crestview, right? And like a Mac Daddy, nice, above average house, whether it is an Adams with a few bells and whistles or a DR Horton with a lot of bells and whistles or something, it would be about 150 square foot. Okay, so we take a 2,000 square foot house, multiply by 150 to 350,000. Okay, and that's what we would insure for. Today, 150 a square foot is barely covered standard construction. Barely. It's borderline economy. We really need about 160, 165. More than that, now when we're talking about above average construction, custom construction, it's just my area. There are areas in parts of South Florida are for 285 for standard. It's really on. Okay. So why? Well, again, materials, labor, and a lot of other incentives. Okay. There are single family law ordinances that prevent dwellings. There are about 5 million less single family homes than in the country. Okay. Homes. 5 million less homes. I think there's many more other people. And a lot of places have ordinances against multifamily dwellings and duplexes, fourplexes, lot sizes. I know a lot of y'all in Florida basically look at the property line and you're like, well, not here. They'll go 10 feet in every single direction of the property line with a postage stamp. Like, I get it. But they probably have rules against duplexes or quadplexes for affordable housing. So builders don't make a ton of money on smaller houses, so they typically go bigger. As entry-level homes are discouraged, they don't make a lot of money, they have a lot bigger houses, and bigger houses typically come with less whistles, higher prices. And it does drag the bottom of the market up. We also see more people that are flipping, and we see less houses on the market in general. When you have venture capitalists and pension funds that are buying out whole investment portfolios. There are companies like Blackstone that own thousands of houses, thousands and thousands and thousands of houses. And again, you had Zillow that looked into trying to flip houses based on their aggregate market data. And that ended up causing a big increase as well, because those houses, they were paying 30, 40, 50,000 over asking cash. Now, Zillow stopped that practice because they ended up losing gas. Pardon my expression, but that's just what happened. So they even got out of it. It also goes to show you that sometimes a good agent, whether it's an insurance agent or a real estate agent, is going to be the person that you want to listen to. Be somebody that advice you definitely consider. So When it comes to inflation, like that, on the homeowner side, it's a big deal. Okay. And it's a big deal with everything that's kind of going on. And that drives up other things too. Increased cost of medical coverage ends up dragging up our, it's a liability portion of our insurance. Increased settlements now end up dragging up our excess liability and umbrella policies. So much that goes on with it that inflation affects the insurance market, not just in little ways, but also in the big ways. And we're paying out more, we have to pay more capital for our policyholders. Ends up increased premiums. Fortunately, that's the nature of the world. So, hope this helps you. Hope this helps you make good decisions. If you want to have a more educated or personal conversation about this, I encourage you to visit my calendar. Let's set up a time to talk. Or at the very least, I hope I can be able to take a second to educate you about how insurance or inflation specifically causes some of these prices to go up. I'm Joe Nelson, Agency Principal, Nelson Insurance Agency. Thanks for watching.